All right. Okay. So quickly, I want to welcome everybody to the class. It's Ginny once again. Sorry about the delays. Had issues with my microphone, but we're back. So now moving on, we'll be looking at candlesticks and some candlesticks patterns for today. So first, quickly, candlesticks are generally they are tools used on every financial chart so as to display price and the movement of price. So they actually display what price is doing at every given time. So like I said on the screen, as you can see on the screen, they are used to display price at a given time. So moving on, it said a candlestick contains four important parts which we are going to be looking at. One is the open, second is the high, the next is the low, and then the close. So quickly looking at what this is, we have two types of candles. We have a bullish candle and a bearish candle. Remember when we said bullish is when the market is moving upward, and then bearish is when we have a candle that is going downward. And now in a bullish candle, we have two things. First, we have the open, which starts at the bottom low of the very candle, and then when this candle closes at the top, that top where it closes is known as the close of the candle. So with that, now when this during the session of this very candle, it would most likely make movements during the section of this candle. Let's see if we can get a color that is a bit different. Let's use dark blue. So during the movement of this candle, if it pushes back down, then we have this wick. This is called a wick. The tiny body, this tiny stick in here is called a wick, while the bulk of the move is called the body. Now during this little move, this lowest level, the lowest part of price, the lowest price it gets to during this piece of time, it could be the 1 minute, it could be 5 minutes, 15 minutes, it could be 1 second. During that amount of time, the lowest in price it gets to is known as what? The low, which is depicted by the wick. And then the highest it gets to is known as the high, and where it closes is known as the close. A bullish candle is a candle that opens at the bottom and closes at the top, while a bearish one opens at the top and closes at the bottom. The high and the low stays the same. Now in a situation where we have this happening on charts, we would have something that actually looks like sorry, not that good with the pen. Let's see if we can clean that out. Presenter view, pointer options, erase or inks on slide. So let's say we have a first candle. This is a bullish candle, and another candle appears just here. This here automatically becomes the close of this one, and this area here becomes the open of this next candle, and it continues on and on and on. Okay, so yeah, with that is literally everything you need to know on that. And moving on, we'll be erasing everything on the slide and moving on to the next one. We have candlestick patterns. Now in a case where we have a bullish candle that goes up, closes full bodied, it sometimes might not be a full body though, but we have another candle that looks almost exactly like it, that completely engulfs the entire move. You see how this one completely engulfs everything. It completely covers this guy straight from the top to the bottom, and even goes ahead to cover a bit more of space than it. This pattern is called an engulfing candle pattern. It's a two candle pattern that most likely leads to the market spiraling to the downside. And then in the case where we have this, one of this candle is known as a tweezer, and where we have two of them, they are known as tweezers. In a case where it is this way, it's called a tweezer top. And when it's opposite, meaning these bars are at the top, the long wicks at the bottom, it's called tweezer bottoms. They also tend to move price. So a tweezer top would most likely send price down, and a tweezer bottom will send price up. Okay, and then we have next up the pin bar, which is another pattern that actually moves price. This actually would most likely send price going downwards, and the opposite of it is called a hanging man, which also sends price. It's called a shooting star, which actually sends price shooting upwards. I think I actually got caught by one of these today. Took a sell in the market, but all of a sudden a shooting star appeared, and things spiraled to the wrong side, even though we had buyers on our end. But moving on, we have Doji. This here. Now let me quickly explain. In this case, we have the buyers buying the market and sending it up, and then all of a sudden sell pressure comes into the market and takes over the whole move. Okay, in this case, it's showing that the buyers do not have enough liquidity. They don't have enough money to push the market to the upside. And here in this case, we can have buyers with $50,000 and sellers coming in with 100,000, or let's say 75,000, and that immediately completely engulfs this. Selling pressure is higher. So in this case, you see that buy pressure is low and sell pressure is very high, and as a result of that, the market should continue selling because sell pressure is a lot high. And then in the case of this, we have an indecision happening in the market, but in this very indecision, the sellers are taking more control, because in this case, if you were watching the candle, you will see it push up and then all of a sudden come back to close bearish, and this opens up, pushes up, and still comes back to close bearish. So this automatically shows that there are buyers in the market, but their orders are very little compared to the sellers. And ultimately, as we can see at the end of each candle, the sellers completely beat them in the fight. So automatically that will send the market spiraling to the downside. And in this case, we have just one candle, meaning that the buyers came to the fight and the sellers beat them hands down. They didn't even win the battle at all. And then on a doji, this is where we have a complete resistance. Buyers could be the one that have won the battle. Sometimes it could be the sellers winning. You don't know what is happening. So whenever you meet this, you have to just pause and wait for the next candle to decide who won the fight. I have had a situation where we had something like this and we took a sell ignorantly, and all of a sudden it pushes up. And we have also had situations where we see the same pattern and we say, last time it took us out when we took a sell, let's take a buy this time, and it still takes you out. So you don't actually know who won the fight here. You just have to wait and see what comes into the market. Is it buy pressure? Is it sell pressure? You just wait, find what happens, and then take control from there. And then in this case, we have an evening star and the morning star. In the evening star, we see that the buyers came into the market, and then indecision, sellers take over, and we send price down. And in here, we have strong sell momentum, buyers take over, and price pushes upward. Okay, so now these are called entry criteria. These are the things you look for. These patterns, you can search for them when you are about to take a trade. So whenever I take a trade, I most likely look for a tweezer. I would most likely look for an engulfing candle. It's been a while since I traded this last, but I remember I still trade these two very, very often. I hardly trade this, but I most likely have not traded this in a very long time. This is a recipe for failure. This guy, I don't trust it anymore. There was a time when I do trust them, but I don't trust it as much as I did before. And then in case of this, I still have to set rules around them that would make me trade them. There are things I would see that would not make me take them. These are called entry criteria. So please ensure that you store them in your memory, because they're going to help you a lot going forward. Moving on, we have what is a trend. Now there are three types of trend that we're going to be looking at quickly in this section. I think I'm actually going too fast in the video, but yeah, I hope we all understand. Now we're going through trend. First we have an uptrend, secondly we have a downtrend, and then finally the consolidation. Now an uptrend is basically a market that is going up, spiraling to the upside, and nothing else happening. So you see in here that we have a market that is pushing upward, that actually pushes up, and from pushing up, at some point it starts spiraling to the downside. You see it's spiraling to the downside, and from spiraling down it picks up momentum and starts going up. Now what happens in this very situation is that from this area, this is the original momentum of the market. Okay, and then we don't have enough buy pressure to continue pushing this market down. Now mind you, when this is pushing up, we could have Damien on the chart. Sorry, I'm using our names. We have Damien on the chart, we could have Chris, we could have a lot of us on the chart, and we cannot buy in here. So we say we want to see this market come down before we take a buy. We want to buy it cheap, right? So there could be buy orders sitting around here. There could be buy orders sitting here, and what the market does is come in, take those orders, grab those orders, grab as many orders as it possibly can. Now at this point, I believe it has grabbed everybody's orders, and then the movement upward continues. Okay, and then at some point it also comes back to grab orders. Now when you take your time to study, you will notice that price actually found its way back to this area here. Okay, I think this is more straight. That's because in most cases people would want to buy, have their orders sitting here. Some will have their orders sitting here, some will have their orders sitting here. So price will come down, take in those orders, and then continues going up. Now those people that have their orders here would most likely have their stop losses here. Some will get tagged out, some will remain in the trade, and eventually those that are able to enter at the right time would have mainly most of their orders still on while the market moves up. And then when we talk of a downtrend, in a downtrend, what really happens is we push down, we grab orders, push down, grab orders, push down. That's basically what the market is doing in the downtrend. So how do we trade this? Remember I said when we have the market taking out highs, we look for price to retrace back to the most recent high that was broken, or close to 50% of the range. Sometimes there are other things we can look at as this more formal entry, and we look for an entry around here and we can take up sell. Now back to this, what makes us know an uptrend? We should have, first we have our low here, and then price creates a high. Then after that it creates a higher low, and after the higher low, price takes out the most recent high and creates what we call a higher high, and which is followed again by another higher low. So these are the requirements: higher high, higher low, higher high, higher low, higher high, higher low. And in the case of this guy, we have a high which is followed by a low, and then later we have a lower high which is followed by what? A lower low, and then continue we have what? Lower highs and another lower low. Then moving on from there, the church around my area decided to start their program. But anyway, that's cool. Let's go. Now in a consolidation, what we have is what we call a range. So we have price retesting an area in price, struggling to break an area. In this case, we can highlight, sorry about that, we could highlight this low as the area. We could also highlight this area, sorry. How I wish it was possible to easily clean off most of this. It would make my work a lot easier. I think from the next class I'll start using my pen too. It's a lot easier to draw with that than it is with this one. So made a mistake. Pen. So price could be retesting this region here. As you can see, it's also ranging around this, and that's it. This is a range. Price is finding it hard to break this low, just as it's finding it hard to break this high. So what it's going to be doing is ranging, or should I say consolidating, moving within this price range for a long time, and then eventually it's going to break out and move into an uptrend, or it goes into a downtrend. One of them is bound to happen. Now there is an assignment you guys will have to do here, but I won't be saying that until the end of the video. So let's move on. I want to keep this section very short. The next thing we have to do now is pen options, visible, and then we'll move. Accumulation, manipulation, and distribution. Now what happens during accumulation? Accumulation in an uptrend, as you can see on the screen, you see that when price pushes up, it goes down. It's called a pullback. It pulls back, in order to accumulate orders, to accumulate new orders, and then which it sends up, it distributes to the upside, it continues going up. And in here we should have another accumulation happening, and from there we distribute to the upside. And then in the case of a ranging market, or should I call it a consolidation, what happens during this section is what? A manipulation. Mind you, in this very area here, what is actually happening is let's see if we can get our pen. Price is rejecting to break this region and rejecting to also break this region. But you see that sometimes price will go above it. What it's doing at this area is causing certain people to feel, when it breaks this high, somebody will say, okay, so now we have a high, a low, a higher high, a higher low. It means the price is about to go up, since we have created what? A higher high. And this here becomes what? A higher low. So whoever sees this would immediately take a buy. And then price immediately goes to take this person out. It goes up and it turns back down to take out the buy. So that person has lost money. Okay? And meanwhile, somewhere else, someone else sees this move happen here, and that person says this is a high, this is a low, this is a lower high, and this is what? A lower low. So automatically when he sees this, he says this is also what? A lower high. So they will take a sell, and price immediately goes back up, takes that person completely out. That person has lost money. Someone else, somewhere else would also see this and say, okay, low, high, higher low, higher high. Let me take a buy. You still lose. So it keeps taking everybody out, and finally everybody loses their money and they go home, and then we have price jump down, and then the man that lost money here will say, shit, I should have waited for the sale. Why on the other hand, the guy that was taken out from the buy would have said, this was supposed to be a buy, this was supposed to be a sell. Imagine I had taken the sell here, I would have been deep in cash. And this is what just happens every day in, day out. This happens. I'm telling you, and I'm speaking straight from experience, because I have lost a lot of money in this market. My own students know how much we've lost. We've had situations where we have a strong bias, but we get the market gets so manipulative that we just lose so much money. But then moving on, we have price in this area where now this is one of the reasons why we actually created this section, so that you learn what you're doing when you get to the market. Don't just stumble on the market. You should know what you're doing when you get there. Now in here you see that after we break the low and we enter a downtrend, what happens here is what? Price pushes down, comes back, accumulates orders, and pushes back down, accumulates orders, pushes down, and so on and so forth. This is the cycle of the move in the market. Now I believe this should be the last slide. I'm not so sure, but I believe it should have been like the last slide I have for today. Next section I will start working on it immediately, but then I want you guys to do something for me. Your assignment for this very class is go over to your chart, get me an uptrend, a consolidation, and a downtrend. If you can get them all in one chart, I want you to mark it up as accumulation, distribution, and manipulation. Mark them out. Mark out the manipulation areas in the consolidation you find. Okay, this is how you're going to do it. Spot an uptrend, spot a downtrend, and spot a consolidation. Then while looking at it, I want you to mark out the accumulation areas, I want you to mark out the distribution, and I want you to mark out the manipulation. I'm going to probably do an example of this on my phone, because I know most of you are operating with your phones. So I'm going to do a quick example on it, and I'm going to post it on the group so that everybody can actually have something to work with. And with that, see you on the next video. Happy to have you guys on the session. The next session should come as fast as it's possible. And yeah, do have a great day.